TV, my friend Dan Gibbs. We want to talk about his recent article. Is it called The Retail Apocalypse?
It's actually called Weakening Consumers Will Be a Drag on the Retail Sector Going Forward.
Also known as The Retail Apocalypse. So what made you decide to write this article?
Well, actually, there was a piece that was written by a guest blogger on Zero Hedge, who just mentioned a bunch of the statistics that I point out in this article, such as Walmart's profit being down $220 million in the first quarter compared to the previous one. Target's profits fell. Dollar General's profits fell more than 40%.
What's like the worst number you saw?
Off the top of my head, I'm not certain. The most surprising one was Dollar General, because that's always the company that you assume would do very well if people's...
Because it's cheap.
Yes, it's about the cheapest to shop in of any of these places.
Yeah.
And it's also interesting that it was pretty much only the mass market retailers that were affected. Neiman Marcus had a very good quarter.
I mean, the higher end shops did better.
Right. Neiman Marcus had a very good quarter. Burberry is planning an expansion because it's doing so well. These are stores that cater primarily to people with much higher incomes than, say, a Walmart or Best Buy.
And so you published this when? A couple days ago?
A few days ago. It was Tuesday or Wednesday this week.
So then what happened is yesterday we got a very, very negative GDP print.
Yes, my report went up within a day either way of that.
So how bad was it?
It was minus 2.9% was the actual number. It was the worst miss compared to the consensus of economists in years.
Yeah. I think it's like the 15th worst GDP number of all time. So it's pretty bad. It's like as bad as 2008, like as the recession first hit. So Dan, you've written like 440 articles for Seeking Alpha. The core of that analysis is probably in the oil industry. Is that, you agree? Specifically on the oil drillers, the guys that go out to sea and put these things down in the water and drill 20,000 feet in the sea and so forth. So the biggest thing that might be happening right now in the oil industry is we saw the price of Brent crude is moving above 110, 115, like approaching 120. And what probably is more cause of that than anything else, we have a negative GDP print in the States, shows that the global economy is pretty soft. So with rising oil prices, all eyes go to Iraq, because we have some very scary guys known as ISIS running around the northern part of the country. Could you make some comments about what you see is going on in the oil industry? I think you also just did a piece on a Russian company in the southern part of Iraq. What do you see playing out there?
Correct, that the majority of my research has been focused on the oil industry, particularly the offshore drillers. However, I have done some work with the onshore ones. In response to your question about the rising oil prices, I do agree with your assertion that what's going in Iraq is a very big thing. Iraq has the third largest deposits of oil in the world, at least with regards to conventional oil, which is important because it's much more expensive to pull oil out of unconventional areas like the shale deposits that we have here in the United States, as opposed to the much more conventional fields in Iraq, which, to put it in perspective, the conventional fields would be the traditional image that everyone thinks of with oil fields, where you can just drill a hole and oil spurts out. It costs under $10 a barrel to produce that oil, roughly. The actual figures are very, very well guarded, but it's somewhere around there. Whereas producing oil in an area like the Bakken is in the range of $50 to $75 a barrel. So with Iraq having the third largest deposits of this conventional oil, the hope is that as the country was being redeveloped following the US-led invasion back in 2003, that it would become a major production center of oil, and as it was at the time the last remaining source of cheap oil on this planet, it was hoped that it could be used to help satisfy the world's increasingly growing demand and thirst for oil. Now, the Russian company that you alluded to is Lukoil, which is the largest independent producer of oil in Russia, meaning they are the largest oil producer that is not majority owned by the Russian government. Now, their field is the West Kurna field 2, which it's not entirely theirs. It's owned about 56% by Lukoil. The Iraqi national oil company called South Petroleum Company owns about 20% and the remaining percentage is held by the Norwegian giant Statoil.
Your article here, could you just tell us a little bit about the scale of the production of this Iraqi field that's controlled by Lukoil?
Sure. The field will be developed in 3 phases. The first one will be producing 450,000 barrels of oil whenever it's completed. And then the second phase will add another 100,000 barrels of oil. And this is all per day number, by the way. And then the third phase will increase that by an additional 650,000 barrels of oil per day, which will bring the total up to 1.2 million barrels of oil per day whenever it's completed.
We worked on a piece together recently called something to the effect of building the brick block on the foundation of Russian reserves. And obviously we mean oil and gas reserves of Russia. Tell us what the brick block is, you know, how it affects the position of the petrodollar, what that might mean for the US dollar, and specifically interest rates.
Russia has the largest deposits of natural gas in the world and potentially the largest deposits of oil as well, at least unconventional deposits. Now, what Vladimir Putin has been attempting to do is to form a trading bloc that is analogous to the European Union, such as the early relationship between Germany and France that led to the formation of that union.
What is the brick bloc, and what do you mean by the brick bloc? What does that mean in relation to the dollar and the trade that's going to happen between Russia and China and some of the other, what we frequently refer to as emerging markets, or we used to call them the third world countries? Is that trade going to happen in the dollar or something else going on?
Well, China and Russia recently signed a very large trade agreement between each other for about $500 billion worth of energy over a 30-year period. Earlier today, they formally announced that this will not be conducted in US dollars, which does put a bit of a wedge into the petrodollar standard that has been the standard of worldwide trade for the past 30, 40 years. Now, the BRIC bloc itself would be more inclusive than just China and Russia, but the potential is that all of the countries that get involved with it eventually begin moving away from the dollar and using either the ruble or the yuan as their preferred currency for international trade.
A lot of your work, whether it be with offshore drillers or other kinds of companies or Asian REITs, you focus on equities that produce a lot of income. And Pittsburgh's own famous hedge fund, Druckenmiller, just wrote a piece in the Wall Street Journal editorial. They called it, we have the asset-rich, income-poor economy. And he believes this is very, very negative, that the Fed is far too heavy-handed in trying to drive the stock market higher. What do you think he means by the asset-rich, income-poor economy?
Well, I'll admit that I have not read the Druckenmiller piece at this point. It is on my to-do list. However, if we look at the dividend yields of the stocks in the S&P 500, we'll find that the entire index as a whole has a dividend yield under 2%. The Dow Jones is higher, but still not high enough to generate the sort of income that, say, retirees would really need from their portfolios. So what we have is a case where assets are trading at a very high valuation relative to their dividend yields, at least in the United States.
For Powerhedge TV, I'm Jim Sheeter, joined by my friend Dan Gibbs, who is the editor of Powerhedge Global. Join us next time here at Mateo's on Butler Street in Pittsburgh.